Hello, everyone. We're going to continue doing some asset pricing, financial economics. Um, in this video, we're going to go into a new dimension. So we have, so up till now, well, first of all, I'm in GeoGebra. So up until now, we've been doing, I'm going to start just saying a year from now instead of in the future. So we've been talking about now and a year from now. So just two dates and one state in each date. But now we're going to talk about two states in the future time. So basically, what that is like the stock market going up or the stock market going down. There's basically just a good scenario and a bad scenario. And then today, given that we already know what's going on today, that's not probabilistic. It's just, what it is. Right, so what we'll do here is we'll go into our 3D calculator. All right, so here we're presented with this 3D space. And just like last time, the sort of the function value or the height is going to be the asset price. So that's going to be today. We also did it with it being cash flow. So it was negative usually, but since it's sometimes hard to deal with things under the plane, we're just going to go back to the sort of notation where we're talking about price, so it's going to be positive up here. Okay, and then what are the two other dimensions right here? So this, since it's red, we'll call that the down state or the bad state, and since this is green, we'll call that the up state or the good state. So going this direction means your asset has a higher payoff in the bad state, and going this direction means your asset has a higher payoff in the good state. Okay, so I'll go ahead and make us an asset, and we'll kind of get started from there. So 1, 1, 1, just to give us a little something to start with, and then I'll just go ahead and type in vector of A. Okay, so now we have ourselves a little asset, and as before, we can buy or sell any amount of this asset we want. So we'll go ahead and turn it into a line. Okay. So now, right, so this thing, just the vector itself was the asset, and the whole line is the market, because you can buy or sell as many as you want. Okay, so now we have ourselves a market, and this asset, if we look down this direction, it pays off $1 in the bad state. It pays off $1 in the good state. So it's sort of like a bond, or you can consider this putting money under your mattress, right? Because it pays off $1 in the future no matter what happens to the stock market, and it's going to cost us $1 today, right? So $1 today, and this is actually what we're used to seeing from the previous videos, right? We're just looking down one axis. So we can see payoff tomorrow, costs $1 today. This is like putting money under your mattress. We could also look at it from this direction, right, and see kind of the same thing, right? Okie doke. So let's just change up our asset a tiny bit. So that's this time, let's say it only pays off in the bad state, and it doesn't pay off at all in the good state. So now you can look down again, and it pays off in the good state or the bad state, and it does not pay off at all in the good state. And again, we can look along this axis and say, okay, it's paying off here and it's costing 1 here. But now, if we look, I think I grabbed it kind of funny. Let's go this side. I don't think that's what I want. I think this is what I want. Okay. So now, what we're seeing is we're looking down the bad state, so we're looking at the good state, and you see it has no direction this way. So this asset does not pay off at all in the good state, right? So this is almost like insurance. You can think of this sort of as insurance, right? It pays off when things are bad, but doesn't pay off when things are good, right? Okay, and then of course, just for completionist, we'll do the other one, and we'll say we've got $1 in the good state and no money in the bad state. So this would be like some very risky investment. This is almost like a bet. You're like, oh, I really want it to be the good thing, and then you get nothing in a bad state, right? In fact, a bet would look a lot like this, right? So it pays off nothing in the, actually, a bet looks a lot like this. Okay. Right, so it pays off nothing if you lose, right? But if you look down this axis, it pays off $2 if you win, but it only costed you half of that, so 50 cents or a dollar, right? So you can pay $1 to play. You either win $2 or you win 0, right? Okie doke. So now that we've gotten ourselves kind of familiar with this market, let's think. I have one other thing to show you, just so you get acquainted with using GeoGebra in 3D. So if I move my mouse over this, it shows those 4 arrows. So what that's doing is it's moving this around without changing the height. So you see if I come along here, right? If I see those 4 arrows, when I move it around, it's not changing that height at all, okay? So I'm going to come back up, and I'm going to grab this and move it back. And now you see those 4 arrows. If I just tap it one time, now it shows up and down. So now it's moving into and out of the plane. And you can see it's above the plane. Now it's under the plane, okay? So I'm going to go back to the 4 arrows. All right, so now we're pretty used to our market. We're used to using GeoGebra in 3D. So what's next? Let's answer our questions about markets, okay? So the first question is this market complete? All right, and remember what complete was. So in our previous examples with only one future state, all we had to do was look along this axis and say, all right, can we get every future payoff? Is it possible to get all of these future payoffs? And the answer was yes, because, okay, if I want to get $5 in the future, what do I have to do? I just have to pay $5 now, right? Or if I want to get negative $4 in the future, what do I have to do? I have to pay off negative $4.50 or however, I don't think this is exactly at 1-1. Yeah, so that's that. Is that happening in this market? And the answer is no, because even though if you were just focusing on this, just the bad state, or just the good state, you can get all of them. You can't get every combination of them. So for example, what if I said, okay, I want an asset that pays off $2 in the bad state and $0 in the good state. Could you get that asset? No, you can't, because there's no like surface here. There's no function value to grab. So this market is incomplete. No matter where I move this, let's say this is our market, I can't get anything over here, right? So this market is incomplete. Okay, next question, the law of one price. Does the law of one price hold? And the answer to that is yes, because it kind of checks off our 3 criteria. First of all, it's a single valued function, right? So it's there's not another price up here. Another thing is it goes through 0, 0, goes through this origin, right? So there's the option of just doing nothing, okay? And then there's also every incremental change in these payoffs, they cost the same amount, aka this is linear. And it's linear no matter how you look at it, right? Okay, so that's the law of one price. So now the question is this arbitrage free? All right, and maybe this one might be good to kind of think about on your own for a second if you want. So I'll go ahead and start though. All right, so this asset, this market, it pays off $2 in the good state, and pays off $2 in the bad state, right? If I move it right around here, something like that. Okay, but it costs money today, right? So it's above this axis. So that's arbitrage free, right? You can't get free money with no risk, right? So this is arbitrage free. All right, what if I move it over here or something, right? What if I move it right on this axis, okay? So this one pays off $3 in the bad state, no dollars in the good state, but it still costs money to get today. So that's not, that doesn't break arbitrage free. There's no arbitrage in this, okay? So if I come over here, what about here? Okay, so I'm getting, what is it? it's about $1 in the bad state, $3, and we're paying $3 in the good state. Is that arbitrage free? Yes, it is, because we still have to pay, because we have a possibility of getting money in the future. We have a possibility of losing money in the future. And so when we're in these areas of the quadrant, like this area or this area, whether it's arbitrage free or not, these areas don't really matter for arbitrage free, because we already have an upstate, in the upstate and the downstate, we already have a chance of losing money and getting money, right? So really the areas we have to look at are when both state payoffs are positive or both state payoffs are negative. And we just said all of this stuff is arbitrage free. This is fine. What about this? What about this? Let's think here. So this asset, we have to pay $2 whether the market goes up or down. We're always paying $2. And it also costs us money right now to get it. Okay? Is this arbitrage free? And the answer is no, because if this asset right here is an arbitrage, right? You have to pay $2 whether the market goes up or down, and you also have to pay today to get it. Well, what could you do? You would just sell that asset. So now look down here. This is the other side. This is when you would sell that asset. So if you look down there, what are we getting? We're getting $2 in the future, whether the market is up or down. And we're also getting $2 today to make that transaction, right? So this market has arbitrage, right? And so if we think about from the context the other day, when we said, okay, the proportionality constant is what determines arbitrage. So in this case, our proportionality constant is pretty much negative in this direction. And that's sort of a wishy-washy answer, and we'll get a better answer soon. But you can see here that this is negative, the proportionality constant is negative when these are positive, right? So let's look at it this way. When we look down this direction, any payoff in the bad state, that generates money later, and it also generates money now. And if we look down this other axis, the same thing happens. Generate money tomorrow. In the good state, generate money now. And there's no way to ever lose money. And you also get paid for it now. Okay? So this has been 2 states and 1 asset. So thank you. Hope you enjoyed.